Welcome to the Trend Market Update for November 2010. November sales, as expected, were much lower than last November. Last November was influenced greatly by the anticipated expiration of the first tax credit, and so November sales of 2009 were extraordinarily high for what we would expect. This November, we're down 46% compared to last year, and year-to-date, we are now 8.8% behind in closed sales. In the next couple of weeks, NAR is going to be releasing the national home sales for November, and you're likely to hear that it's positive, that the November sales are actually up from October. The reason for that is that what NAR reports on their national updates is seasonally adjusted annualized sales. What's that? Well, seasonally adjusted means that what they've done is taken a look at normal seasonal distribution. And for example, they look and see where sales normally occur in months throughout the year over the last few years. What they'll do then, and let's say July is exactly 10% of the total annual sales. If July sales then were 5,000, they annualize that and say 10% and 10% of total sales was 5,000. That means it would be annualized to 50,000 sales. Now, that sounds a bit like voodoo economics, but in reality, it really is a good way to portray the market performance against expectations. We know the housing market has high seasonal content, and so by doing the seasonally adjusted annualized sales, we're anticipating what the typical seasonal reaction would be, and then measuring the performance against that. For example, when we seasonally adjust the 2010 sales, what we'll see in there really mirrors what we're hearing from NAR on the national sales. And that is, since July, August and September showed market improvement, stronger market activity. There was a slight decline in October, but again in November, it actually, on seasonally adjusted annualized sales, November actually outperformed October. So that although we know we're operating at a low level, we are showing continued market improvement month after month, with the slight exception of October when we had a little bit of a decrease. We can also apply that same type of approach to pending listings. And when we look at pendings, compared to last November, pending sales were down 6%, year-to-date down 9.7%. But when we annualize those sales and take a look at them, the pending sales have actually improved every month except for September since May. So we've actually had a building market. The market is strengthening and moving more towards what we would hope to be a normal market. Unfortunately, we're right now heading into the three lowest months of annualized sales, and that is December, January, and February are typically the 3 months with the lowest number of closings. But when we look at the pending sales and annualize it, it really looks as though the market is actually gaining strength and we're moving more towards a normal home sales market. The average sold price also increased again and was really very strong in November. The average sold price exceeded last November by almost 12%, and year-to-date is 3.7% ahead. As I mentioned last month, a lot of that has to do with the recovery of the higher-end market. And actually, the recovery of the higher-end market, when we look at $700,000 plus sales, year-to-date it's up 15.2%, but that's more a reflection of the high-end market having almost completely dried up in 2009. Following the meltdown of the financial markets in the fall of 2008, jumbo mortgages were almost impossible to obtain, and the high-end market really dried up in 2009. 2010 now, we're seeing a recovery back to a more normal level. That's it for this year. We'll see you again next year, and all of us at Trend wish you and yours a happy and healthy holiday season and look for successful 2011.